Hope everybody is doing well. Welcome back to the Tommy Stone Show. This is going to be a little bit different of a type of episode. I'm still going to be doing it live, but I'm going to be doing a live trading session in a way. We're going to be going over the type of stocks that I would be looking at this week, how to trade them, what I'm going to be looking for, and why I'm picking them. A lot of the reasons why I'm going to pick these stocks you're going to see are for macro reasons, macroeconomic reasons, just to clarify, but it's mainly the Iran war. I'm looking at a ton of different situations about what's going to happen with oil prices if the war escalates, if the war ends, and then how I'm going to be trading based on that. But as always, this is not financial advice. Trade at your own risk, but this is what I'm going to be doing. So follow along and always subscribe for more. So the first stock that we're going to be looking at today is Delta. The reason I'm looking at Delta this week is because Delta has earnings on Wednesday. So that is going to be the 8th of April. They're going to be announcing their earnings, I believe. I think it's aftermarket. So it's going to really hit on Thursday, the earnings. But essentially, the reason why I'm looking at Delta is because, as everybody knows, currently the price of oil is insanely expensive. I mean, we're looking at right now $113 for a barrel, 112. It is staying up there. I mean, that is actually a slight increase from what it closed at on Friday, which is actually pretty surprising. I thought this would be a major increase. I thought we'd be seeing $118, $120 of worth of barrels. That's would have been the cost of per barrel. The reason why is because Trump is saying that right now the deadline for Iran is April 6th, and that's for them to essentially give up, for them to stop their fighting, and for them to essentially concede the war. And as we know, that is not going to stop. That is not going to happen. Iran just shot down another fighter jet as well. So this is only going to continue getting worse and worse. As we see right now, oil is starting to increase in price just a little bit. It's about almost at $1 increase from when we saw on, I guess Thursday was the close, because it was Good Friday. So what we saw on the Thursday close. But again, Iran is rejecting all of Trump's ultimatums right now, calling it helpless and that he's nervous and unbalanced. And Trump is really giving them this deadline for the Strait of Hormuz to open it up and really try and get oil going back to where it was, get it back down to around that $70 a barrel mark. But that's why I really like Delta right now, because Delta is currently about to have their earnings, and Delta and all the airlines are seeing a huge increase in demand. So that's something that's going for them. So we may not see an earnings beat, but the reason why I'm looking to short Delta this week is because Delta is going to be giving out their guidance this week. And again, with oil so expensive and with the unforeseen future of what's going to happen with the Strait of Hormuz, we're going to see Delta have to comment on this in some way. And in my opinion, I really think that this is going to lean towards Delta losing and going down in stock price. Delta has actually seen consistently pretty good earnings beats, which is kind of surprising for a company like them. Airlines typically are very mixed with what happens during earnings, and Delta has had consistent beats. They're averaging around an 8% increase every single time that they're doing earnings, which is actually pretty impressive. But as we see right here, that's where the mark is. This is where their earnings was. Their estimation was $1.52 for their earnings, and they actually had $1.55 for their earnings per share, which is pretty good. That's a pretty good beat. But again, what we saw right here is the stock increased just a little bit, but then again, we saw a pretty big pullback afterwards. So Delta, as again, like most other airlines, they have pretty choppy earnings results. You never know what's going to happen, but typically the day after earnings, which is what I'm targeting, Delta has seen an increase. But right now I'm expecting that Delta is going to actually see a decrease in stock price the day after their earnings comes out, because they're going to have very bad guidance because of this Iran war. Right now as well, something that's interesting with Delta is they currently have their own refinery for oil in Pennsylvania, but that doesn't really hedge enough for $112 oil or cost of oil per barrel. That is very expensive still. And again, most airliners aren't really hedging for oil like they should be. It's a very expensive process. And the other side of it is oil is very volatile now, and other commodities as well, like we've never seen before. So it doesn't really make sense to risk other assets to do so. So that's why I'm short on Delta this week. But if you are me, I'm going to be looking at it very closely. I'm going to see what's happening with the buildup with the Iran war going into Wednesday. Again, don't place this trade until about Tuesday or even Wednesday, right before the earnings are actually released, to get all the news. Make sure you're fully informed and making sure that, again, what if Iran does concede the Strait of Hormuz? Well, then all of a sudden this is a completely different picture, and Delta might have great guidance going forward with a great surge in demand like we've seen for most airlines. So that'd be a great picture, and that might actually be a huge stock increase, and we could see Delta going above $70 on this earnings beat, which would be awesome. But another side to it, again, if this war ramps up and Trump continues bombing Iran and Iran continues bombing, the areas around them and the bases of America, and they keep shooting down jets like they are, then oil might continue to go up. And again, we might see $120 the cost of a barrel, the price of a barrel. I can't say this for some reason. I don't know why. The cost of one barrel of oil will be $120, the crude barrels. We could even see it go higher, but I think $120 is probably that next limit, that next mark that we're going to see. But yeah, that's why I am short on Delta this week. The second stock for the week that I'm going to be watching is just a general S&P 500, and the reason why is I'm actually going to be short on the S&P this week, and again, for the same reasons. I believe that the war is only going to increase. I believe that the war is not going to slow down, and that's kind of what I'm betting on right now. And the main reason for that is because the threat for Iran continuing to hit extremely hard isn't just for military reasons. It's for these economic reasons, and right now, the deadline's going to expire, this war is going to continue, and now the military power is going to go towards civilian infrastructure and really just decimate Iran. Trump, quote, for verbatim, said that he's going to make it like they're living in hell over there. And the main reason for this, again, is he's going to destroy all their crucial infrastructure, and he's going to try to do everything he can to open the Strait of Hormuz. I think this is going to really spike fear amongst a lot of investors, and I think that's just going to be the reason for the sell-off. I don't think we're going to see a massive sell-off like the S&P going from, again, it's around 6,500 right now. I don't think we're going to see it go all the way down to 6,000 or something like that, but I do think we could see it go down and touch about 6,300, 6,400. So that's kind of what I'm going to be making my plays on this week. I think the S&P is going to go to about 6,400. And a big reason for this as well is right here, this OBV distribution. That means hedge funds are also starting to short and sell their S&P holdings, which is very interesting. And this CMF indicator right here is for retail traders. This shows that the retail appetite is going down extremely, or at an extreme precedent as well. So both of these combined, that's for the reason for this big drop in the S&P. Again, it was almost touching 7,000 just a couple weeks ago, almost a month ago, and now we're seeing it get right down to the 6,300 level. So right here, this is the technical level I'm looking for. Again, we're playing right. This is right here. This is the, sorry, I forget if this is the, I believe this is my, yeah, this is my 21-day moving average. So right here, the S&P is currently at the 21-day moving average, which is a super volatile spot for not only stocks, but again, for big indexes like this. So I'm going to be seeing what move it makes off of this, if it's going to bounce right up, if it's going to continue going up and maybe touch another moving average, or if it's going to come back down and come back down to this lower Bollinger Band and touch 6,300 again. I really do think that this war is going to continue ramping up. I think that this trade would maybe extend it for a little bit further than just week to really get the full price action, full price movement of what happens to the S&P. Because again, we could see it go to 6,300, but that might not happen over a day or two. That could take about a week. So it's a very interesting position, but again, trade very safely and be very cautious. These futures and trading the S&P, it moves very, very fast. So again, this is not financial advice, but trade accordingly. And now my final position, I am long on Halliburton. The reason why is because if we're going to get a ceasefire, this is kind of the opposite to the last two plays. If we do see some sort of ceasefire or some sort of stoppage of war in the Middle East and with Iran, then the rebuilding process, especially with the oil refinery and everything we've been bombing in Iran with all their oil equipment and oil infrastructure, that rebuild process is going to be insane, and it is going to be huge, and all types of companies are going to get called in for this. So I wouldn't only just do Halliburton, I would do a bunch of other different companies. You can look at KBR as well, you can look at Fluor, but I really like Halliburton just because of their track record and how we're also going to see them in Russia and Ukraine once that war seizes up and stops. So they're going to be having a very interesting next few years depending on how these wars go and how they end up, because there's a lot of oil infrastructure that needs to be rebuilt globally. Another reason why I'm loving Halliburton is because right here we have OBV accumulation up. I just said in the last one, but again, this means that hedge funds are also buying into this thesis, and they're also buying into Halliburton, which I'd love to see. Again, the retail appetite is kind of shortening and it's kind of slowing down, but that's just because we're seeing a little bit of a sell-off right now. The RSI is starting just to pull back a little bit, as again we see it's at about 58 right now, which is a great RSI level for a huge momentum and increasing stock like this. We've seen about a 20 to 30% increase over the last month to 3 months, depending on what you gauge in and where you put it at, but again, about a 20 to 30% increase. So this is a super strong uptrend. Again, that's why we have the full bull uptrend right here. We have our 8-day moving average above our 21-day moving average, which is above our 50-day moving average, which is above our 200-day moving average. Essentially what that means is for the last 200 days, the stock has been trending perfectly in an upward trend. And right now we're not seeing any sort of breakage in that. We're just seeing it pull back to one of the moving averages. And as we see before, this is kind of a prime spot where to trade Halliburton. It kind of gets a little bit of a bounce. Sometimes it will stay there and move sideways for a little bit, but typically it's using this liquidity pullback and using it to go up and find new highs, which I really like to see. Another thing that I'm really liking about Halliburton right now is it also just got an analyst upgrade. It's got an outperform upgrade, and the target is for $40, which I really like to see. But another thing that I like with Halliburton as well going into this is it isn't necessarily tied too much to the QQQ. It's kind of separate. Again, it's more of an oil field services company, and it's more of a building out the infrastructure for countries and for companies who are working in oil and refining oil and mining it out. But again, the reason why I like it is because it's not necessarily tied to the QQQ or the S&P. It's kind of its own field. So if there's a broader pullback there, we're not really going to see it get hit on Halliburton. Again, as we've seen a little bit of a pullback because of the current mess that's going on. But overall, the trend has been still going incredibly strong, and it hasn't shown any sign of slowing down, even with all the macro news that's been coming out. So that's a big reason why I like it. And that's everything right here. That's what it says right here. If you want to get this full trading breakdown, just comment down below. I've been thinking about trying to like give it to my followers and give it to my subscribers, but it gives me all the information I need to know on how to trade a stock. Again, right here, you have like the average true range of how it's moving every single day. And right here, this is the QQQ influence. It essentially tells me for every single stock that I look at, if the QQQ moves up a percentage point, how much is that going to move this stock up? So no matter what's going on with the stock, again, if the QQQ has a great day, then the stock is just naturally going to go up. So I try to find that variation. I try to find those stocks where QQQ might have moved up and it hasn't made its move up yet, or vice versa, or again, however you want to play into it. But this is kind of this is my masterpiece. This is how I trade. This is all the information that I use in order to find my stock. So again, comment down below if you want access to this. But from again, final play, Halliburton, I'm long on them. Thank you all very much for watching. I really appreciate it. I hope you have a great week trading. Again, for all these plays, make sure to look to kind of maybe extend your expiration dates for a little bit further than this week, because some of these are based on macro events and macro trends. And as we know, macro events and macro trends, they don't necessarily unfold in the stock market like how we always want. And it usually takes a lot longer than we think. And we're always a lot earlier than we want to be. So always remember that when trading, you're typically a lot earlier than you want to be. And it's not always going to play out how you want. So give yourself a little bit of a cushion, give yourself a time cushion, and don't over leverage yourself ever, especially in a time of volatility like this with a huge war going on, another war in Russia and Ukraine that's not finished up. You have Saudi Arabia selling oil or barrels of oil now in Chinese currency. I mean, there's a lot going on, especially with midterms as well. So do not trade, do not over leverage, or do not overtrade, and do not over leverage yourself. Be very cautious. But thank you for watching this episode of today's Tommy Stone Show. This was a bit of a different format, so if you enjoyed it, make sure to comment below. But good luck trading this week. Thank you all, and subscribe for more.